Hi, this is a PowerPoint video about federal corporate income taxes. And the ultimate question here is, do you believe they should be higher, lower, do you believe they should be higher, lower, or stay the same, and why? So we're talking about federal taxes on companies like Amazon, Nike, Apple, Pepsi, and also your local pizza joint or your local store. So, first of all, what do federal taxes pay for? They pay for the federal national government in Washington, D.C. They do five main programs. First of all, roughly 20% or one-fifth of the federal national government money goes to the military. That's about $1 trillion a year. 25% of the federal national government money goes to Social Security. Again, that's about $1 trillion a year. What is Social Security? It's a government program that gives money to old people so they can retire. That will open up jobs for young people. And it's also money for disabled people and some other categories that we'll talk about later. 25% of the federal national government money also goes to health care. It's about $1 trillion a year. These are huge programs. About half of that, or $500 billion a year, goes to Medicaid. Medicaid is government money for low income people's health care, for their doctor's visits and medicine and that kind of thing. And roughly half of that money is $500 billion a year that goes to Medicare. Medicare is for old people's health care. Medicaid is for low income people's health care. 10% of the federal national government money, again, $500 billion a year, goes to welfare. Welfare is a bunch of programs. It helps unemployed people so they can get unemployment checks if they don't have a job temporarily. And it helps low income people with money, money for food, for their heating bills, that kind of thing. 10% of the federal national government money goes to paying off the national debt. Our government is in debt and has got to pay back the money it borrowed. And 10% of the federal national government money goes to everything else. For example, delivering the mail, our space program, right? NASA and the rockets and the space shuttles, and foreign aid are all quote unquote small programs. Of course, we spend millions of dollars on those programs, but compared to the big five, they are small, tiny programs. In total, the United States federal national government in Washington, D.C. spends about $4 trillion a year. It's enormous. The U.S. GDP, or gross domestic product, which is our national income, is about $24 trillion a year. So the government spends four out of a total of 24. So the federal government is roughly what fraction of the U.S. economy? Here's a graphic so you can see it in pictures. Here you have the spending. Okay, we call this outlays or spending. And you see that the federal government spends on defense, it spends on Social Security, it spends here on health care and other things here like welfare and the debt. Here, by the way, is the money coming into the government, the revenues. Roughly half of the government money comes from individual income taxes on people like you and me. All right. And here, the corporations pay that much. All right. So we'll talk about that and whether or not that's fair, whether or not it should be changed a little bit. If the federal government spends $4 trillion a year, and the federal government brings in $3.5 trillion a year in tax, then where does that difference come from? Here it is again. Our federal government does many, many different programs, but most of the money is spent on a few major programs. I know it's a little bit hard to see this, but the blue is Social Security, the red is the military, and then you have health care. This is Medicare and Medicaid. And then we've got to pay back the debt and money for welfare. And these little programs like delivering the mail and space are actually small. All right. So, how are federal corporate income tax rates calculated? Basically, it depends on how much money the company earns in a year. On the first $50,000, companies owe 15%. Okay, that's all companies, whether you're Amazon and Apple or whether you're the small flower store at the corner of the street. On the first $50,000, the company owes 15%. On the next $25,000, from 50,000 to 75,000, that's just $25,000. Just on those dollars in that second tax bracket, the government takes 25% of that. If you're up here, if your company's earning this much money, 75 to 100,000 a year, you owe 35% just on the 25,000 in that category. You owe 25% on the 25,000 in this category. And on your first $50,000, you owe roughly 15%. Again, if your company is making between $100,000 and $333,000 a year, of that money, of the dollars you earned in this bracket, the government takes 40%. Now, most companies, a successful restaurant, Nike, Google, Pepsi, Walmart, they're making well over $333,000 a year. So, on all the dollars in this top tax bracket, the government takes 35% of just those dollars in the top tax bracket. The money that the company earns here, what is this, $233,000 in this bracket? The government takes 40% of that, 35% of this 25,000, 25% of this 25,000. And again, all companies, whether you are Amazon or Google, or whether you're the little pizzeria down the street, all companies pay 15% of the first 50,000 they earn. So, I want to ask you, do you think tax rates should be higher, lower, or stay the same? Should those companies have to pay more or less, or should it stay the same, and why? In order to answer that question, you cannot evaluate something on its own, alone, in a vacuum. You need a frame of reference to compare it to. So I'm going to try to give you a little history and show you changes over time. We're going to look at absolute numbers and amount of dollars. We're going to look at percents. We're going to look at where the money comes from, and we're going to look at how it's spent. And we're going to look at other countries and see what they do. And of course, we're going to do a cost benefit analysis and consider incentives and unintended consequences. The whole point here is you cannot just jump, you should not just jump to a conclusion. You should really analyze it and take all these things into account. So let's start our cost benefit analysis of corporate income taxes. What are the costs of this tax? What are the bad things about this tax? First of all, it's a tax, so it costs companies. Also, if companies have less money, they might hire workers or pay them money. If companies have less money, is that good or bad for the stockholders? Companies can also pass on the cost of the taxes to their customers and basically make the customers ultimately pay by doing what to the prices of the products that the company makes or sells. On the other hand, there are benefits. Does taxing companies bring in money to help fund the government? Should companies help fund the government, whose courts and laws and roads and highways the company uses? You could argue that big rich companies can afford to pay taxes. You could also argue that taxing companies like Coke or Disney, they've got a lot of money. That means the taxes on individuals like you and me and our families could go up or down. Now, this tax creates incentives. If we tax companies too much, what might happen? If we tax companies too little, what might happen? And taxing companies incentivizes them to do what? You can also think if there are any unintended consequences of this tax. Let's now look at changes over time. The blue here is the top federal income tax rate on individuals like you and me, and the red is the top federal income tax rate on companies. So if you go back here to the 1940s, you see the tax rate on the richest people was up here around 90%. Why so high? Because in the 1940s, we were fighting World War II against Germany and Japan. Since then, what's happened to federal taxes on individuals? They've gone down. And now the federal income tax rate on the richest people is about 40%. What about the corporate tax? The red is the top highest federal income tax rate on companies. And you can see here the change over time. What has happened to federal income taxes over time? Have they gone up, down, or stayed the same? And what do you think of these changes? Are they good or bad, fair or not? Here is an international comparison. How do US federal corporate income tax rates compare to other rich nations? I know this is a little bit hard to see. If you compare the US to France and Germany, those are rich nations, and Japan. If you compare us to Britain should be on here somewhere. These are the rich nations of the world. Korea, okay. How do U.S. corporate income taxes rank? Are we highest, most heavily taxed? Are we about the average, or are we the lightest taxed? Now, it's important to understand that these are what we call statutory corporate income tax rates. This is what is on paper, what by law companies have to pay. But many US companies do not actually end up paying that high statutory rate. They pay less. They pay what is called the effective rate. Okay, so let me explain this. We have tax laws, they're called statutes. And according to the statutory tax rates, our corporate tax rates are really, really high. But US companies do not actually end up paying that high rate. They pay a lower rate, which is known as the effective rate. Why don't US companies pay the full statutory rate? Well, companies are allowed to take deductions and exclusions that lower their taxes. For example, there is the production activities deduction. What the heck is that? It basically says if you make stuff in America, we'll lower your taxes. Also, if a company like Nike pays taxes to Germany because they sold shoes in Germany, or to Mexico because they sold shoes in Mexico, the company can write off those tax payments that they made to other governments and lower their taxes in the US. Also, if the company leaves money abroad and doesn't bring it back to America, they don't have to pay some taxes. So, if Coca Cola makes money in Germany by selling a bottle of soda in Germany and Coke leaves that profit in a German bank account, they can avoid some US taxes. So, again, companies do not pay the high statutory tax rate, they end up paying the lower effective tax rate. So let's continue with our international comparison. We're going to compare the United States of America to the OECD. The OECD is the Organization for Economic Cooperation and Development. It's basically a group of economists who study 30 rich nations. It's basically Europe here. That's England, Germany, France, Spain, Italy, and others. It's Japan and South Korea. It's Australia, New Zealand, Chile, and Mexico. These are basically the 30 odd rich nations of the world. Here's the OECD. These economists have this office outside of Paris. There's downtown Paris in France. And so we can compare US corporate taxes to other countries. All right, so here's the US statutory tax rate. How does our statutory tax rate compare to other rich nations? Is it higher, about the same, or lower? Now, look at the effective tax rate that US companies actually end up paying. Is it higher than other rich nations, lower, or about the same? Here is a look at some non OECD countries, such as China and Brazil. And again, let's compare the US statutory tax rate, what companies theoretically need to pay by law. Are our corporate tax rates higher, lower, or about the same compared to the 15 largest countries? And now let's look at the effective tax rate that companies end up paying. Is it higher, lower, or about the same? Let's look at some other studies. These economists, Markle and Shackelford, they compared the US and Canada, France, Germany, India, Japan, and UK, and they looked at the effective tax rates that companies actually end up paying. And how do US taxes, US corporate taxes compare? Above average, about average, way below average. Here's another study by Swenson and Lee. And again, how do US effective corporate tax rates compare to other countries? I like this slide because it shows you changes over time in the 60s, 70s, 80s, and 90s. Okay. And again, it shows you the tax rates. Okay. So here are the corporate tax rates, about 29%. And here's the rest of the OECD, those 30 other rich nations. Okay, so how do US corporate taxes compare to other rich nations? Here's another look at a change over time. This is the effective corporate tax rate since 1947. Has it gone up? Has it been flat? Or have effective corporate tax rates gone down? Here's another look. Here we can see corporate profits over time. They're in blue. And this is how much of the national economy they are. You can see that corporate profits have gone up, and they're about 12% of the national income. So companies are making more money. You can see in red the employee compensation, in other words, worker pay, and worker pay has gone down. So worker pay is now about 40% of the national income. So the point here is that companies are making more money, workers are making less money compared to before. So are you okay with the fact that our effective corporate tax rate has gone down? Is this making it too easy on US companies? Are they getting off scot-free? Is this unfair? Or is this helping US companies to thrive and make more money? What do you think? Here's another look at it. And this is basically the composition of federal tax revenue. In other words, where does the federal government get its money? Most of the federal government's money, about 40% here, 45% in blue, most of it comes from individual income taxes on you and me. If you look here at the red, the corporate income tax is only about 10% of the money going into the national government. So the corporate amount has gone down. Do you think that's okay? Because we want our companies to be lightly taxed so they can thrive? Do you think this is not good? Do you think companies are getting off too lightly? They're getting off scot-free. Maybe they contributed to the politicians, and so the politicians have been lowering their income tax. What do you think? Okay, here's one last look. Again, the federal government gets about half of its money from individuals, and the federal government gets less of its money from corporations. Is that good? Is that bad? Is that fair? Let's come back to our ultimate question. Do you believe that federal corporate income taxes should be higher, lower, or stay the same, and why? I hope this has been clear. If you have any questions, please let me know. Thank you.